Hello, everyone. I hope you're having a great Sunday morning. Thank you for joining me. I'm just going to wait a couple more minutes to make sure that everyone is able to join. Great. Well, let's get started. We have a lot to cover today. So I'm Sylvia Blount, and I'm an instructor at the American Institute of Finance, and I'm securities licensed Series 79 and 63. I work as an investment banker, so I'm sure you'll get some good insights during this session. So today we're going to continue exploring the topic of how to break into finance, and specifically we will go over a few key concepts and questions of the new SIE exam, which, as we discussed during last session, is really the first step to become an investment professional. So as always, just a little bit of housekeeping before we get started. The study session is being recorded, so you will receive the recording via email and after the session, and it will also be available on our website and on our social media. Again, all our attendees are in listen-only mode, but feel free to ask questions in the GoToWebinar control panel. I will also answer a couple of questions during the Q&A session at the end of the presentation. Great. So for today's agenda, we will go over the key concepts, as I mentioned, of the SIE exams, including capital markets, products, trading and settlement, regulatory framework, and then we will, I will explain how to tackle a couple of SIE exam questions, how to register, and then finally, as I mentioned, we're going to have a Q&A session. Awesome. Great. So let's jump right into the first key concept of the SIE exam. So as I mentioned last time, there are 4 major blocks or topics, broad topics that you will find in the SIE exam. The first one is capital markets. You will see, a few questions on this topic. Not so much, probably, I believe it's 7 questions. And within capital markets, we can identify the primary market and the secondary market. So the primary market is essentially where securities are bought from the issuing company, with the profits going to the issuer and the underwriters and not to investors. So typical example is an IPO. So that's where the securities will be listed for the very first time to the market. And then in terms of the secondary market, that's where securities are traded among investors. So any appreciation in value will go to the investors and not to the issuing company. So that's the main difference. And then within the secondary market, we have 4 types of markets. There you go. So the first type within the secondary market is the auction market, or it's also called the first market. This is a physical location where stocks are trading, and a good example is the New York Stock Exchange. So again, the securities are listed on the and traded on an exchange floor. Then we have the negotiated market, or it's called second market. A good example is NASDAQ and over-the-counter type of exchanges, so OTC, where the unlisted securities trade in 2 major segments, OTCBB and pink sheets. And then we have the third market, which is the negotiated market, and that's for institutional investors and broker-dealers where they trade listed securities on OTC. And again, this provides competition for the exchanges. And then finally, we have the fourth market, which is another negotiated market, where listed and unlisted securities are traded, again, by institutional investors, but without a broker-dealer. So that's the main difference between the third market and the fourth market. This is also called the ECN market. Moving on to the second main, I would say, block of the SIE exam, that's products. That's, as I mentioned last time, products. You will find a lot of questions on that. That's about 44% of the exam. So that's again the biggest section of the SIE exam. And I typically like to say that there are three main categories of products that you will find during the exam. And those are equity securities, debt securities, and options. Again, in the exam, you will also find other types of products. Those are the main categories to talk about you guys today. So within the first category, equity securities, we have common stock, preferred stock, warrants, ADRs, and rights or rights offerings. So in terms of common stock is the basic form of equity or corporate ownership, and share of stock. In a share of a stock is a basic unit of ownership. Now, in terms of the preferred stock, equity security, that's an equity security that pays a fixed dividend based on the percentage of its par, which is typically 100. Then we have warrants. Warrants is an interesting concept. That's an equity securities that offers the owner the right to buy shares in a company at a predetermined price in the future. That's typically used in bond offerings as a sweetener. Again, because it will give the ability to then purchase additional ownership in the company. And then we have ADRs. There are receipts of foreign securities trading on American exchanges. So the actual shares are kept on deposit in a foreign branch of an American bank, essentially. And then we have the rights or rights offerings, where the company offers the current shareholders the right to purchase additional shares at a discount, obviously, to the market price for a limited time. And then we have the second category, which is debt securities. That's also highly tested on the exam. That includes bonds, government debt securities, and money market securities. So, essentially, bonds, look at it as a mini loan for companies. So that's a way to remember bonds. And then in terms of government debt securities, there are different types depending on the duration of the debt product. We have T-bills, T-bonds, and others. And then finally, we have money market securities, and that includes CDs or certificates of deposit, commercial paper, and repos or repurchase agreements. So those are common examples of money market securities. And finally, we have options. So a lot of people may think that options are going to be highly tested on the SIE, not so much compared to the Series 7, for example. So in the within options, you will find call options and put options that we actually discussed in our sections, in the previous sessions a couple of weeks ago. Great. Then the third concept is trading and settlement. That's also highly tested in the SIE exam. So trading essentially takes place on exchanges or OTC or over the counter. So after trading, what happens is that you have to clear and settle the trade, right? So clearance means that the details on both sides of the transactions are compared electronically to make sure that the order to buy and the order to sell match. And then obviously the trade confirmation from each side is compared, and then this process is done by the clearing agency. Then moving on to the settlement, the definition of settlement is when the buyer of the stock receives the actual security and the seller receives the payment So that's a settlement. The regular way settlement is called T+2, which means 2 business days after the trade date. So that's for almost all securities. Only US Treasuries and options settle within 1 business day after the trade date, and so T+1. And then cash settlement occurs. On the trade date. So most trades in the US are cleared and settled through the NSCC, or National Securities Clearing Corporation. So that's a little bit about trading and settlement. And then finally, we have the last main block of the SIE exam, which is the regulatory framework. I believe we're talking about 10 or 15 questions on this, but the questions that you will find on this are a little bit more detailed and will require a little bit more attention. So I like to talk about 2 main aspects of the regulatory framework, but obviously there are a lot more regulations, and questions about this. But essentially, you have on one side the regulatory entities, and on the other side, reportable events. On the regulatory entities, you have the Securities and Exchange Commission, or SEC, that probably most of you are familiar with, and that's the primary regulator of the securities industry. The SEC writes regulations and enforces securities laws. The SEC also oversees the markets and the self-regulatory organizations, or SROs. And like we discussed last time, SROs are an example could be the New York Stock Exchange or NASDAQ, and FINRA, which is essentially an association of broker-dealers. And then when it comes to reportable events, obviously you'll find more events that during the actual exam, but the 2 main events that I wanted to discuss are the outside business activities, or OBAs, and then private securities transactions, or private securities transactions related to selling away. So the first one, OBAs, essentially means that once you're a registered representative, you're prohibited from being paid from an outside business activity unless you provide prior notice to your supervisor or the principal. Also, member firms or broker-dealers need to make sure that the outside business activity does not influence the rep's current job performance. So that's very important, highly tested on the exam. And then when it comes to private securities transactions or selling away, that's essentially any securities transactions outside of the regular scope of an associated person's employment with a member firm. So if the participation is compensated, then the rep must give prior written notice to his employing firm with details of the transactions. And then the firm will then decide whether they want to approve the transaction and person's participation or not. So these are the main concepts of the SIE exam. Great. So moving on to the types of SIE questions that I'm sure that most of you are interested in understanding and seeing perhaps a couple of examples of questions that you will find during the exam. So I wanted to emphasize that understanding the products and the risk associated with these products makes up to close to half of the SIE exam. So as I mentioned, 44% of the exam will be products and risks. And as I mentioned before, this includes equity securities, fixed income, mutual funds, and also basic options, option concepts and strategies, and very quick calculations. also, because the different securities are tested on both the SIE and your top-up exams, you can expect the SIE to include short definitional questions on these topics, while the top-up exams, Series 7, 79, or 6 will delve deeper into more scenario-based suitability type of questions. So as I mentioned last time, the SIE is very broad, very basic, so short definitional questions. And then also within the SIE exam, you can expect the regulatory questions to be longer and more detailed, especially in comparison to the product type of questions. But let's talk about actual questions. So the first few examples that I wanted to show you guys are related to products. So, it could be equity securities, bonds, options. So these three questions are a great example of the type of questions you will encounter during the exam. So the first one says, an owner of ABC corporate bond is a owner of ABC, customer of ABC, creditor of ABC, or analyst of ABC. So let's look at it. So owner of ABC, as a corporate bond, it's a debt type of security, so I would eliminate this answer because an owner would be a common shareholder. A customer of ABC, I would also eliminate that because it's a corporate bond, it's a debt type of security. It's nothing related to being a customer. And then a creditor of ABC, creditor means that the owner of a corporate bond as a credit, as a debt security, you have a credit on ABC. And analyst of ABC, it doesn't tell us much, but the right answer is C. So creditor of ABC. So I always like to, before we move on, I always like to emphasize that when you see this type of questions, it's good to start by, if you're not sure about the answer, it's good to start by eliminating the answers that you may think that are definitely not the right answer, and then you go down to the perhaps 50-50 with the two questions left. Perhaps you were thinking, an owner, you see the word owner of ABC corporate bond, you may think that the owner of a corporate bond is actually an owner of ABC. So that's not the case. Also, another tip that I can give you guys is to, as crazy as it may sound, I always like to tell the students that you should spend very little time per question. So no more than a minute per question. That should be definitely your goal. Also because your mind's going to play tricks during the exams, and I know that very well because that happens to all of us. So you spend very little time. If you see an answer that you think that that's the, you kind of remember based on your studying, then go with that one, and then you can always come back and make sure that you got the right answer. Moving on to the second question on products type of examples. So the holder of an XYZ call option is bearish on XYZ, bullish on XYZ, an investor of XYZ, or eligible for dividends on XYZ. So a call option, if you're an holder of a call option, you're pretty much long the call option, meaning that you want the XYZ, which is the underlying stock, to go up. So bearish means that as a bear, the bear attacks from the top going down. So you think that the stock will go down. Bullish, the bull will attack from the bottom going up. So you want the stock to go up. So the right answer is B, bullish on XYZ. Again, not an investor, not eligible for dividends, because call option will not be eligible for dividends on XYZ. And then moving on to the third question, this is this type of layout that you see here is very, very common for questions on both the SIE exam and top-off exams. So you will have 4 different options, and then you will have to select perhaps just one of them, or 2, or 3, or all of them. So for options traders, bullish positions include buying calls, selling calls, buying puts, or selling puts. So as I mentioned before, if you're buying a call, then you want the you have a bullish position, right? If you're selling call, you want the stock to go down, so you're bearish on that position. If you're buying a put, it's the opposite of buying a call. So what happens is that you want the stock to go down, so that's not the right answer. And then selling a put is pretty much the same as buying a call. So again, you're bullish on that position. So again, the right answer is buying calls and selling puts. So you will see a lot of this type of questions where you have to pick 2 or 3 or all of them. So moving on to the rule question examples, these are a little bit more challenging. As I mentioned, you will see they're much more detailed, and you will have to spend more time on these questions. So just a quick example. John is developing promotional material for Mega Fund, an investment company. Once the material gets the required approval, John will send the material out to potential customers and to broker-dealers who will send it out to their customers. So which of the following are true? The promotional material will require prior principal approval, or John will need to send the material to FINRA 10 days prior to its first use. Or John will need to send the material to FINRA within 10 days of its first use. Or if the broker-dealers do not change the promotional material and give it as is to their customers, they will not need to file with FINRA. So this type of questions on potential customers and the type of material that gets approved and submitted to FINRA, that's very, very common. And essentially, when you have promotional material, you would have to require the materials about, you will need to have prior principal approval, and it will also need to be filed with FINRA within 10 days prior to its first use, right? But if the broker-dealers do not change the promotional material and they give it as is to the customers, then they will not need to file it with FINRA, because John has already filed it, so there's no need. So the right answer would be, sorry, see it here. There you go. Great. So moving on to the last question or example I want to talk about. So a registered representative has become friends with an employee in the back office who assists in the processing of trades for the firm. When the rep effects trades for his clients, he offers to share some of his commission with his friend as his way of thanking him for his help. This arrangement is acceptable if approved by the firm, acceptable if the arrangements are documented in an official record, prohibited unless approved in writing by an operations manager, or prohibited as unregistered persons cannot receive compensation. So this is a great example of a very, very common type of question in the SIE exams and top-off exams. This type of questions will kind of trick you into thinking that perhaps if you ask for approval, some of activities will be acceptable to the firm. But let's remember, every time that someone receives a compensation from any type of customer activities, that person needs to be registered, right? That's why we all get registered. So in this scenario, the activity is prohibited because we're talking about an unregistered person. So unregistered persons cannot receive commissions under any circumstances. Great. So lastly, I wanted to talk about how to schedule your SIE exam. So there are two ways that you can register for your exam. The first one is individually, and the second one is through your employing broker-dealer. So let's take a look at the first scenario. Simply go to finra.org and you can create your account. Obviously, wait for your temporary password to be sent via email. Standard is when you create any type of account online, and then pay for the exam. The exam is $60, and then if the voucher code was provided by your employing firm, then this will zero out your balance. And then once you pay for your exam, you will receive your FINRA ID that will then use to schedule your exam through Prometric. So Prometrics are locations where you can, obviously you're going to take your exam. And yeah, you just go on their website that you can see here on the screen, and you click schedule, reschedule. You can select your date and time and location. And yeah, and then you're going to go and take your exam. And then in terms of scheduling your SIE exam through your broker-dealer, obviously it's a lot easier on your end because the employing broker-dealer will open a Form U4 on your behalf. So you really don't have to do anything on that end. And then the only thing you have to do is schedule the exam through Prometric. Great. So awesome. So now I want to turn things over to you guys and take some time for questions as always. So just a reminder, you can type your questions on your right-hand side in the control panel. And it looks like we have a couple of questions. Let's see. So Joe asked, what is the best way to prepare for this exam? Well, obviously, you would have to read the book a couple of times. That's one of the best ways to prepare. And then, answering a lot of questions. Go over the test bank with your exam provider. That's very helpful, and that's key, I would say, in this type of exam. So you get familiar with the wording, with the type of questions, so you're going to be able to tackle different types of questions. Great. So Michael asked, how long does it take to pass the exam? How would you break down your daily study plan? So great question. I would say that if you have a little bit of finance background, perhaps you're studying finance for your bachelor, then I would say that it should take a month. If you really do not have a background in finance or wealth management or business in general, then probably a couple months. But again, the nature of the SIE is fairly, as I always mention, broad and straightforward. So it shouldn't take more than a couple months in that case. And then how would you break down your daily study plan? Well, I always like to at least spend 30 minutes a day, if not more, so that you get accustomed to seeing these topics on a daily basis. I think that's very important, and I wouldn't go with more than a couple of days without at least opening up your book and answering a couple of questions. Let's see, John is asking, which area should I focus on the most? Is it regulations or products? Well, as I mentioned before, the product section is the biggest section of the SIE exam, so 44%. So we'll definitely focus on that one and understanding what a common stock is, preferred, bonds, and broad strategies of options. So that's definitely key to understand. Obviously, as I mentioned, also regulations are pretty challenging in terms of the type of questions that you will see, more detailed questions. So you should also spend some time with that. But again, you'll find, I believe, 10 questions on regulations. So it's not a big section of the SIE. Again, I would pay more attention to the products. But again, if you have experience already in finance and you know the products, then perhaps you should spend more time on the regulatory aspects of the exam. Great, I think that was the last question. Thank you, guys. So that concludes our study group session. I hope you found it helpful. And during the next session, we will go over more details on the top of exams and under securities licensing. But again, this session recording will be available shortly. And if you would like to receive additional information, you can check out our website and also email us at info@americanif.com. You should also check out the Finance Pills page at americanif.com/financepills. And thanks again for joining us today, and I will see you next time.